Welcome everyone who's joining us on this webinar. I'm Rich Greer, your franchise broker. As an introduction, I've been in franchising for over 35 years now as both a franchisee in two separate systems, and the past 15 years as a franchise broker, coaching my clients and helping them understand the franchise business model. My job is to help my clients understand what franchising is all about and research those franchise brands that best meet my clients' objectives and business acumen. So think of me as your free franchise consultant since the franchisors, they pay my fees. Today we'll be reviewing some very important topics about franchising. I'll be taking you through the various slides today to review the basic franchise business model. Just as a reminder, if you haven't already completed my business assessment, please do so in time to give me the time necessary to review your assessment report, conduct the research for the right franchises to present to you with your unique business goals and acumen, allow time for me to reach out to the franchises to determine if they have availability in your area, and create your research presentation slides. It shouldn't take you more than 15 or 20 minutes to take the assessment. Make sure to check the send the report to me box, and you'll also get a copy of the assessment report. Feel free to share the link for the assessment with your spouse or any potential business partners. And for those of you watching this as a recorded webinar, I provide the franchise business assessment to my clients to help me in helping them. The report from the assessment lets me better understand my clients' business values, preferred work environment, sales and operations acumen, so I can best match them for what the franchisors are looking for. I represent over 2,000 franchise brands. Trying to choose the best franchises to review with my client would be almost impossible without matching their skills to the franchisors. Once I receive my client's assessment report, I go right to work to find the best matches, and we'll build a PowerPoint presentation so my client and I can review their best matches. So think of me like a real estate broker uses MLS to find their clients' best homes to review. I subscribe to a platform called FLS, Franchise Listing Service, that helps me find my clients' best franchises to learn about. You can also request a link to take the franchise business assessment. My contact information is on the last slide in today's presentation. Just send me an email requesting a link for you to take my business assessment. And I absolutely welcome questions. So if you do have questions, I just ask that you key them into the chat. We'll be holding the questions to the end. And everyone, please feel free to write to me with any questions you may have about the presentation, or ask for a link for that franchise business assessment, or a PDF copy of my book, Finding a Better Version of You Through Franchising. It's a book I wrote, happy to share a PDF copy with you. Again, my contact information will be on the last slide. So let's get started. My intention today is to provide a baseline understanding of what the franchising industry is all about. Most people researching franchises don't have this understanding of franchising, but should. This franchise education includes a basic understanding of the franchise business model, and we'll also discuss very quickly the franchise due diligence process. So getting into the business model, sometimes I'm asked by my clients, why a franchise, Rich? Why would I buy a franchise instead of buying an independent or just starting out on my own? And by the way, in my book that I referred to earlier, Finding a Better Version of You Through Franchising, I dedicate an entire chapter to this question. So the first thing I want to point out is the strength of franchising. This year alone, we're going to be increasing franchising by over 20,000 units, a 2.9% increase from last year, from almost 900,000 units. Franchising is also expected to add approximately 210,000 jobs this year, and the franchise output is projected to exceed almost $1 trillion this year, to gross domestic product, reflecting a 4.4% increase from last year. which was almost $9 billion last year. So we contribute heavily to the economy, to the job factor. We've been around for almost 100 years. Very strong industry. So if you buy an independent, typically the old owner will stick around for 30 days, and then they're off starting their new life. They're not going to have any time to be helping you understand your business after the 30 days. You're not going to have an operating system. You're just whatever you happen to learn in 30 days is your operating system. And it's probably hasn't changed since the old owner started it 10 years ago, 15 years ago. With franchising, you're going to have a step-by-step operating system and also a step-by-step marketing system. We'll get into that in a moment. You're also going to have pre-training, training, and ongoing support. The pre-training, you'll have a coach that will contact you before you go to training. The coach will contact you and you'll help you create your LLC, help you find your office warehouse, help you put the equipment in the supplies in this your new office, so that when you come out of training, you'll be ready to start up your new business. And you're going to have lifetime support. Typically, every week you're going to be talking to your coach. You'll be going over marketing plans that you developed during training. They're going to help you stay on course to meet your revenue and profit objectives. And they're going to be flying out to visit you occasionally just to go over your books, go over P&Ls, go over marketing plans. You're also with the franchise. You're going to get you and hundreds of other, or maybe thousands of other franchisees are buying all your supplies and materials and equipment from one vendor, one preferred vendor. That means the home office is getting the highest discount that vendor provides. None of your competitors, no matter how big they are in your area, are going to get the same discount that you'll be getting because hundreds of people or businesses are buying from that vendor. Your competitor doesn't have the buying power to demand the same kind of discount you're going to get. You can give that discount to your clients, meaning you should never lose a bid because of price. Your home office has a marketing department. Their entire job is to create your local website, do the all the search engine optimization, any digital marketing, do the social network marketing for you. And finally, no franchise is happy with where they are today, meaning they're always looking for the next product or service to beta test and roll out to their franchisees, so the franchisees can provide the same services products to their clients. And it may also be new marketing procedures. Perhaps it's new social network platforms to market on. So the franchisors are taking all that off the franchisees' plate. Now, if you buy an independent, you're not going to have the time to figure out what's new in the marketing world, what's new in the products and services. You're certainly not going to be able to work on your website as much as your franchise will. You would never get the same discounts that a franchise would get because your buying power would never match that of a franchise. And you're not going to get the support and training that a franchise would get. Some legal issues. Let me start off by saying this is not a legal issue for you, the franchisee candidate, to be concerned about. I like to bring this up because it just kind of makes us feel better that Big Brother is watching over us. Back in the 1960s, that franchising got big enough that the government decided it was big enough to start being regulated. It needed a regulatory agency overriding it, and the FTC became a regulatory agency. Now, what that means is that every franchise out there now has, well, in the last 40 or 50 years, now has brand new rules, regulations to abide by. Every state has their form of FTC2. Every state has their own franchising agency within the state. And so a franchisor has to abide by 51 agencies in order to sell and service franchises. The franchise business model has changed in the last 50, 60 years because of these regulations. And how the franchises have changed is well before the 1960s with franchising the franchisor's business model was selling franchises, not so much anymore. Franchises now, if they lose a franchisee, they have to report that to the FTC. The FTC could fine them if there's something wrong going on, and someone could end up going to prison for the franchisor if it's something fraudulent. So franchises are very, very careful who they award franchises to. And so now their business model is support. So from sales to support. So all this means that you got 51 agencies looking over, making sure that the franchises are being honorable and are good. It's a good industry to get into. So we're going to now talk about some of the documents you're going to receive from the franchisor. When you're going through the process, you're going to get, and usually this is going to be after the second call with the franchisor. The Federal Trade Commission mandated that every franchise create what's called a franchise disclosure document. We call it FDD for short. And it has to be updated every year. Within that FDD, there are 23 sections called items, item 1 through 23. Each item gives you, the candidate, information about the franchise that would be difficult for you to find on your own. And not necessarily bad information, but information such as, well, I'll give you 4 examples, the first 4 items. Item 1 is who's the franchise and has it ever had any other name? And so if we saw the FDD for KFC, it would say, we are KFC, but we used to be called Kentucky Fried Chicken. So there's no red flags on that. We understand why they changed their name. But if we're looking at an FDD and out of one, they're changing their names every few years, there's some red flags going up. I'm not even going to ask them why. We got plenty of options to look at, and I don't want to get involved with something like that. Item 2 is the executives. What are the executives' biography? And this is usually the first one of the first items I look at in a new FTD. I want to make sure that the executives have been in franchising for 20 or 30 years. They've developed other franchises into very successful operations for their franchisees. And item 3 and item 4 have to do with litigation and bankruptcy. Has the company or any of the executives ever experienced bankruptcy or litigation? And if so, what was the outcome of the litigation? Personally, if I see that one of the executives had a bankruptcy 20 or 30 years ago, I don't care. Most of us go through some hard times in our lives and we come out on the other side. If I see the franchisor went through a bankruptcy maybe 2 years ago, I probably won't even talk to them. I'm not interested. Same with litigation. You can barely walk out your home without getting a lawsuit. And a couple of lawsuits, litigations, I'm not that concerned about, especially if it's like the franchisee is offering products they're not allowed to. Like if a Burger King franchisee is now offering pizza, well, that's not, the franchisor is going to cut you out on that. They don't want you to do that because it's not what they do. It hurts their model and their brand name. So a few litigations, no, not a big deal to me. Um, when you get that FTD, you're also going to get a copy of the franchise agreement. This would be the contract that you would sign if you decide to buy a franchise. However, at this point that you get this, we probably have 2 or 3 months ahead of us in the process. The reason why you have it so early is to give you plenty of time to review it. It was written by a franchise attorney, but it's written in everyday language. Both of these documents are very, very easy to review. So again, this is just sent to you to give you plenty of time to review it. Now, when we talk about specific franchises, which in our next call, the franchise research Zoom call, I'll be presenting to you in PowerPoint presentation 3 to 5 franchises and who they are, what they do, and some of these other items that we'll be going over here. The first is the startup costs. Now, most of us might think startup costs is how much it would cost to open the doors, but this is actually a little bit of a misnomer. It's actually the complete investment to hit break even. So, this would include the franchise fees, warehouse, office, lease payments until you break even, salaries, wages, buying equipment, marketing expenses, etc. And also there'll be working capital because you will be burning money for your first few months before you hit break even. So all that's going to be listed in item 7 of that FTD. You remember that FTD has 23 items. Item 7 will break down that investment for you. Franchise fee is a one-time fee. Each franchise has its own franchise. And by the way, each of these will be discussing in the PowerPoint presentation. Each of these are also in the FTD and in the franchise agreement for you when you do receive these. So this is a one-time fee. Think of it, I guess, as a fee to enter the franchise. Uh, but this covers most of the franchisor's expenses to get a new franchisee on board. This will be listed in our PowerPoint presentation as well as in the FDD and the agreement. The royalty fee and the national ad fee, these are two fees you're going to be paying. Most of them are on a monthly basis. And the royalty fee will be anywhere from 3% to 7%. It'll be in our presentation what it is. The reason why you pay the royalty fee is this covers the franchisor's budget. This is how they make their revenue. This covers the executive salaries, your support team salaries, the marketing team salaries, travel to support you, and there are other fees. Plus, they are for-profit business. So think of the royalty fee. You and every franchisee are paying this to the franchisor on a monthly basis, and this pays their budget. The national ad fee is a completely different fee, and sometimes it's just called advertising fee. This is used for national exposure for the franchisee's business. So this is going to be for the franchisee's marketing. Not that you can write a check on it, but as some examples, perhaps the websites are getting old. It's time to rewrite the websites. Maybe it's to create new videos for the websites. Or perhaps it's to put a full page ad in a nationwide magazine that's going to go out to advertise your business. So these are the two main fees you're going to see in that FTD. Every franchise agreement has a term, 5 to 10 years, 5 to 20 years. Most of them are 10 years. So the reason why there's a term is because in the United States, for a contract to be legal, it has to have a start date and an end date. And so what happens towards the end of the term, someone from the home office will call you and say, hey, we're getting close to the end of the term. Would you like to renew with us and stay a franchise owner for the next 10 years? And you can say yes or no. Both are allowed. If you say yes, they'll send you a brand new franchise agreement. You'll sign it, date it, send it back to them. You're not going to pay that franchise fee again. That was just a one-time fee. And now you're a franchise owner for the next 10 years. Uh, or you can say, no, I think I'm going to go become independent. Thank you very much. So at the end of the term, when that happens, you'll have to give up everything that's proprietary Now you can keep doing what you've been doing. You keep your customer base, but you're going to have to change your company name. You have to create your own website, get rid of any CRM that you may have or any other anything that's proprietary from the home office. Most people, they're very happy with what their investment. They stay on board, but at the end of the term, it's completely up to you. It's a business decision. Okay, we're going to be talking about different ways to get into franchising here. I'm going to use me as an example first too. That the further down we go, the more expensive it is, but the more free time the owner has. So I resigned from my position. I came from the IT world in 1990. I resigned and became full-time active ownership. I was the manager. I opened the doors in the mornings. I closed the doors at night, made my bank deposit, and went home. Um, and then I evolved. I didn't know it had a name, but I evolved into the semi-passive part-time platform or model. So this is where, when I was active and started making money, I started hiring internal staff. And when I had a general manager who could run it as well as I could, uh, I became part-time. I'd come in on Tuesdays, Wednesdays, and Thursdays. I take off November and December just because I enjoy the holidays. When I did come in on Tuesdays, Wednesdays, and Thursdays, it was usually about 9 or 10 in the morning. I'd leave around 10 or about 2 or 3 in the afternoon because I had a general manager who ran it. Now, this is still going to take 10 to 15 hours a week from the owner because, most of us, we like to do our own bookkeeping, our own payroll. You're going to want to meet with your GM maybe on a weekly basis to talk about marketing plan, but you could do that during your lunch hour. You could do it after hours or even on Saturdays. Um, and the reason why this is more expensive, of course, is you are the manager. Here you've hired a full-time manager. And then there's a few models. There's not very many franchises that offer this, but this is completely passive. This is where the home office, they hire your general manager and they manage the general manager. Manage the entire business. You're going to spend 1 or 2 hours a month reviewing metrics and reports from the home office. And this is more expensive, of course, because not only you have a general manager, but you're paying a fee to the franchisor to run your business. Different types of franchises. Now, this is, I'm going to use me as an example of this one too. A single unit is where you're buying one territory. My first franchise, the territory was defined as 50,000 qualified homes, and a qualified home is any home with a household income over $100,000. So that you could be a single unit owner, buy one territory, put an office in the middle of it, and this is your territory you can serve. Or you can buy multiple territories. Franchisors typically discount the second, third, and fourth territory fees or franchise fees. This was me. I actually bought 4 territories because my line of thinking was I could quadruple this guy's revenue and profit potential, but I have the same operating expenses because you could run, oh, I don't know, 10 or 15 territories with one office warehouse. So I had my office in the middle of my territories. I had one general manager, one lease payment, etc. And I became a top 2% of revenue in the business franchise I was in. So this was me. Now, the next is the area developer. This is where usually these are larger metros where you and the franchisor, you agree that you could have two, three, four, five, six offices, and each office would support three, four, or five territories. So in this model, the area developer would buy 12 territories. Day one, he's buying 12 territories. And eventually he's going to have 3 offices, one in each quadrant. With an area developer, you're buying all the territories at once, but you're developing them over time. So your first 4 territories. You're going to put an office in there. You'll be developing it, and then um, whatever your agreement says, will, as in this example, will say 2 years later, once this is profitable, making money, you've got a general manager running it, you're going to open your second office. You've already paid for the territory. So at this point, your only out of pocket expense is going to be an extra lease payment. And you're going to develop that. 2 years later, after you've got this is profitable and this is profitable, you got a general manager running this one and this one, you're going to open up your third office. And now after 6 years, you have in our example here, you've got 3 offices. You're going to have 3 general managers, and the profits off this, no doubt, would be able to easily afford an area manager or regional manager, so that you could have all 3 general managers reporting to your area manager, and that person would report to you. And then the holy grail in franchising, the master franchise. This is where you purchase a huge territory, like maybe the entire state of California, the state of Texas, and you're going to become a mini franchisor. This is where you're buying the entire state. You're not developing the state for yourself. But anytime someone wants to buy a franchise in your master area, you're going to be the one they're going to be working with, and you'll be taught how to do that with the home office. They will find your franchisees for you. And if they buy the franchise, they are your franchisee. You're the master, you're their franchisee, and you split the franchise fee and the royalty. And it's usually a 50-50 split with the home office. So you get 50% of the franchise fees and royalties for the life of your business. The further right you go, the more expensive it is. Here you're buying one territory, here you're buying multiple territories, here you're buying many more multiple territories, here you're buying a huge area. But the further right you go, the more lucrative it is too. Just to give you an example, I've only had one person do master through the decades I've been doing what I do. I've only had 2 or 3. Usually, this is partnerships getting together, 2 or 3 friends that want to get together, or perhaps it's like a group of doctors that want to get together and have the revenue to and the money to invest in it. I'd say 95% of my clients do one or the other of these two. And this is nothing you have to make up your mind on. This is just giving you terminology so as you're talking to the franchisor, you understand the lingo. Here I took a clip of just what every table of contents of every franchise disclosure document looks like. You got 23 items. The last item you'll notice is a receipt page. The franchisor has to prove to the Federal Trade Commission, their regulatory agency, that they are distributing these FTDs to their candidates. The only way they can do that is for you, when you get the FTD, the franchisor is going to ask you to print that receipt page, print it, sign it, and date it, and send it back to them. It's a simple receipt page, read over it. It just says, yes, I did receive this franchise disclosure document from this franchise on this date. And the franchisor, they will send those over to the FTC for the validation they were sending the franchise disclosure documents out. You're also going to get in this, you're going to get 3 years of the franchisor's P&Ls and their most current balance sheet. Uh, I like to look at that just because I want to make sure they're strong. I want to see high profits. I want to see a lot of cash in the bank account because I want to make sure they're going to be there for forever, right? Let's see if there's some others I want to go over. Item 7, we talked about that. So first, then how much that it's going to cost you to get to break even, the total investment. This is how they define what a territory is. So in my franchise, it just said we define a territory as 50,000 qualified homes. Qualified home is a home with the household income over 100,000. If they do any internal financing, it'll be listed here. Item 19 is a fun one. This is their earnings claim. This can be anything, but it has to be factual and audited. And usually this is averages. Like our franchisees that have been in business over a year are averaging $2 million in revenue, or perhaps our top 25% franchise owners are doing $5 million in revenue. So that's the fun one. We all enjoy looking at that one. Also, when you get that FTD that come with these exhibits, uh, Exhibit A is that a franchise agreement we talked about. Exhibit E will be in our, we're going to talk about this a little bit in our next slide, but this is, you're going to get a list of every one of their active franchise owners and the contact information, phone numbers, email addresses, and the same with all the franchise owners who left the business in the last year. So we'll come back to that in just a moment in our next slide, but you're going to get a list of all the franchise owners and their contact information. So this is our typical franchise process. And I'll slow down a little bit on this. I understand there's a lot here. Uh, it typically takes 2 to 4 months. Our average is 3 months to go through the process. I had one gentleman do it in 27 days, had another guy do it in 30 days. Those guys were lightning. Most of the people, like I say, take about 3 months, and I had one group of people take 18 months. We'll go at your leisure, whatever is best for you. So our process starts off with an introductory call with me. We'll talk about your my background just a little bit, but we're going to talk about your background, what's got you interested in franchising, uh, uh, perhaps some of the positions you've had in the past. We'll talk about industries you might enjoy meeting or learning about. And at the end of this meeting, we're going to set an appointment for our franchise research review meeting. And I'll get in that in a moment. And I'll also send you a link for my business assessment. Now, the business assessment takes about 15 to 20 minutes to take. This by taking the assessment, it helps me tremendously when I'm looking for franchises to present to you. And this is what this is all about. I'm going to be presenting PowerPoint presentations of 3 to 5 franchises that meet what you're looking for, your business acumen, your business goals. And that's what the business assessment helps me. The assessment gives me a really good understanding of your the work environment you would prefer. Some people prefer fast pace, some very slow, quiet. Your business values, your sales acumen, operations acumen, and I use all of this to match with franchisors. I represent over 2,000 brands. I could not possibly present 3 to 5 franchises to you without knowing more about who you are, your background, and also your business acumen. So once I create that presentation, we have our research review here, and these are going to be Zoom meetings, and this takes about an hour to go through the presentation. At the end of the presentation, I'm going to introduce you via email to my favorite funding agency called FranFund. There's no obligation to work with them, but they will send you an email. They'll just say, "Hey, it's great to meet you. Here's my Calendly. Please find some time for us." Um, and they'll also send you a link for their financial form. Please do fill in their financial form. It doesn't take very long. It's a very high level. It doesn't ask for social security numbers or bank account numbers, just assets, liabilities, income streams, etc. Because they're going to pre-approve you. Just like getting pre-approved for a house, if you're talking to a mortgage broker, we need to get you pre-approved so we know what your financial cap is to look at franchises, right? If we find out you're pre-approved for $500,000, well, we probably won't need over $150,000, but it's nice to know you've got it. But if you're pre-approved for 100,000, then that tells me to cap the franchises I'm going to present to you at $100,000. There's no point in looking at other franchises that cost more, right? So anyway, they're going to pre-approve you. They're also going to instruct you or present to you options that you probably don't even know are available to you for starting a franchise. All they do is help franchisees find funding options. You can continue working with them if you like. If you'd rather work with another institution, you can certainly do that. I'll send over an email to you, introduce you to Fran Fund, but I'll also send you an email introducing you to each of the franchises we reviewed here. Hey, Joe, meet my client. Mr. Client, meet Joe with XYZ franchise. Joe, please reach out to my client for an initial call at your convenience. And now you're working with the franchisor. You're in his process or her process. And I won't be with you on these calls, but I always ask my clients and the franchisor to please copy me on all emails because you and I will have our what I call franchise strategy call between each round with the franchisor so we can discuss this is just between you and me, what you like, what you don't like. If there's some other material you might be needing and data you might be needing, I'm your coach and consultant at this point. I'm helping you get the information you need, and I'm paying attention to what you're telling me, what you like and what you don't like. And also, we're starting with 3 to 5 franchises. When we get to the end, we'd like to be at one franchise, right? Now, I've had clients go through the entire process with 4 franchises. I've had clients dismiss 3 or 4 right away, and we can certainly do that if you'd like. But I recommend let's not dismiss any until after the second call to give you plenty of information to make that decision, but also to evaluate one franchise with the other. So we're going to have these strategy calls. The first call is going to be with the franchisor, who they are, who their clients are, how they get their clients, perhaps looking at some proprietary software they have for their franchisees. Usually the second call, you're going to be talking with the operations director. He or she's going to be going over a 3-year pro forma. You're going to see projections, monthly projections of cash in, monthly cash out for your first 3 years. Or you may be talking to their marketing director, talking about how they're going to support you for the life of your business, marketing wise. You could even be talking with the CEO, where he or she'll be going over the vision of the company. And again, between each round, you and I'll be talking. These are 15-minute calls, whereas these are 1 hour calls. These about 15 minutes. It doesn't take very long for us to go through our strategy calls. After this second call, they're going to send over that franchise disclosure document. And then the third call with the franchise, you're going to be doing FDD review. This is where you and the franchise development director will be going over the franchise disclosure document one line item at a time. Make sure you're happy with it. Make sure you understand it. And then this is the next stage. This is my favorite stage, validation calls. So you've heard from me what a great franchise it is. You've heard from the franchisor what a great franchise it is. Remember that list of franchisees in the previous slide where you get their names, where they are, email, and phone numbers? Well, at this point, we want you to talk to as many franchisees as you like. This is going to be just you and them talking. You can ask them anything, and they will tell you the good and the bad, the ugly. This is why we call it validation. When I see one of the reasons why I ask for you and the franchisor to copy me on all emails, when I see an email coming across saying that they want you to talk to as many franchisees as you like, I have an email I will automatically send to you that would have it's about a list of about 20 questions that I would ask. I've been doing this for so long, I just decided to come up with a list of questions that I would ask if I was going through validation. So I'll be happy to share that with you. You can use it, not use it, but you're free to ask any questions you like with the franchisees. And remember, the franchisees, they went through this too. So they understand why you're calling. They understand the purpose of the call, and they're going to spend the time with you to help you make your decision. The last call with the franchisor, this is a mapping call usually. This is where you and the franchisor, you'll be on a Zoom call. The franchisor will bring up an interactive map. He'll ask you or she'll ask you what zip codes you'd like to serve. They'll enter those zip codes into the map. It'll populate the map. They may say, we need a few more zip codes to fill out your territory. Give them a couple more zip codes, and now this is your territory. You chose it. You got to choose it. What your territory looks like, the boundaries of your exclusive territory. Exclusive territory means no other franchisee in the system can serve clients within your territory. And so this is yours till you make your decision. The last step, and I love the discovery days. They're going to ask you to fly out for their discovery day. This is a one-day event, usually 9 o'clock in the morning to 4 in the afternoon. If you come in the night before, they usually will take you out to dinner. If you come in, they'll pick you up at the airport. Excuse me, they'll pick you up at your hotel. Or if you're flying in that day, they'll pick you up at the airport, bring you in. Uh, the executives will present to you, talk to you about the vision of the company. You'll meet your complete support staff. You'll meet one-on-one with the operations director and the marketing director so they can talk about how they're going to support you and your business. Um, they'll take you to lunch, and after lunch, you'll tour a local branch. At the end of the discovery day, and by the way, this is sometimes called Meet the Team Day, Meet Your Team Day, Join Our Team Day, Join the Team Day, but it's all the same event. And some franchises do this virtually, but most of them do them one-on-one. At the end of the discovery day, when they're taking you back to the airport or taking you back to your hotel, they'll ask, "So when's a good time for us to ask about your decision?" I guarantee you, you're going to know the answer here, yes or no. And the answer may be no, but you're going to know the answer, yes or no. It's not going to be much time. You're not going to need to reflect on it. But let's have a cooling off period, right? So I don't know, give me 3 business days, give me 5 business days. And then at those 3 or 5 business days, your business partner can talk it over. And then the franchise development director will call you. If the answer is yes, they're going to send you a brand new franchise agreement. It's going to be addended to include your territory that was defined here. You'll sign it, date it, send it back with your franchise fee, and now you're getting ready for training. If the answer is no, that's fine. I've actually had a client tell me one time, now that I've learned so much about franchising, Rich, in these last 2 or 3 months, I'd like to go back and visit with one of those that I dismissed early. And he ended up buying that franchise. So we could do that. Or I've learned a lot more about you through our strategy calls because I'm taking notes of what you like and what you don't like, and I'm learning more. So I can go back and do another research review and see what are the franchises you might want to learn about. So uh, I I want to go to my chat box and see if we have any questions here. Uh, and this is my contact information. If you have any follow-up questions, would like a link for my business assessment or a link for my book, please give me a call or send me an email. Happy to send it to you. So first question is, Rich, great presentation. Thank you. I appreciate you taking the time to help simplify the due diligence process. My question is, am I going to get the hard sell from your contacts? Absolutely not. Uh, we understand that you are in learning mode. You're not in buying mode. There's no obligation all the way through. I don't like hard sales. I don't like being sold to, and I presume you don't either. So no, you're not going to have any kind of hard sell from any of the contacts. The funding agency is just going to give you your options. The franchisors will just talk to you about what they have to offer and answer your questions. Make you feel comfortable whether this is the right fit or not for you. Next question. Hi, Rich. Hi. I don't know if franchising is right for me. Looking at that flow chart of the process, it looks like I'll be talking with several people. I don't want to waste anyone's time if I decided to go in another direction. Please be assured you're not going to waste anyone's time. I understand. I kind of feel the same way about that, on a personal level. But, you know, as a statistic, one person out of 20 that I talk with purchases a franchise. That means 19 out of 20 do not. And I'm okay with that. I'm fine with that. And the franchisors, they know you're talking to other franchisors. They know that chances are we're gonna call and let them know that we're gonna dismiss them. And by the way, when that time comes, if you'd like me to do that, I'm happy to do it. Um, but if during this process you tell me at the end, Rich, it's been a lot of fun. I've really enjoyed working with you, learned a lot, but I've decided I'm going to go in a different direction. You'll hear nothing from me, but it's been a pleasure. I wish you the best of success and the best that life has to offer. And we'll go away as mutual friends. So you're not wasting anyone's time. We are educators. We understand that. Question is, am I committed to keep going in the process? What happens if I decide to drop out? Good question. All I ask, if anywhere during the process you've decided, this isn't for me, I'm going to go in a different direction, just let me know. I'm happy. I'm not happy to get that email, but I understand getting an email. I will contact the franchisors, let them know so that they don't have keep continually contacting you. Just let me know anytime during the process. If you want to drop out, you just send me an email. Just let me know it's been fun, but you've decided to go in a different direction. I remember you sending me an email with the link to download your book. I can't find that email. Can you please resend the link for me to download your book? Please, yes, happy to do that. Just send it to my email address. Ask me for a link. I'll be happy to do that. Um, let's see, your process flow chart shows an average of 3 to 4 months to complete the process. Can I expedite that timeline? Yes. Let me know, when we're ready to talk to the franchisors, let me know that you'd like to expedite the process. We're not going to skip any steps, but instead of waiting 3 to 7 days or 1 to 2 weeks between each step, we could do this like two phone calls per week or one per week to expedite it. So absolutely, just let me know that you'd like to expedite it, and we'll certainly take I'll do that for you. So again, if you're watching this, feel free to write to me with any questions or to ask for a link for the business assessment or a copy of my book. My contact information is right here. Thank you for joining me today, and I look forward to talking to you soon. Bye for now.